the Grand Duchy of Luxembourg might be small or anything but insignificant. According to the IMF, the top 50 wealthiest nations include giants like the United States and Norway. So, how did this little European country find itself among the top 50 richest countries by GDP in 2023, boasting a staggering $142,490 per capita? During the COVID-19 pandemic, while many economies were struggling, Luxembourg's GDP only dipped by 1.3% in 2020. Then, in 2021, it bounced back with an impressive growth rate of 6.9%, outpacing the EU's average of 5%. Clearly, Luxembourg is doing something right, but what is their secret? How is Luxembourg staying at the top of the economic ladder? And what do we really mean when we say a country is rich, especially now when income inequality between the super rich and everyone else is growing? When we talk about a country's wealth, we often look at key indicators like GDP, GDP per capita, GNP, and GNP per capita. These metrics help us gauge how productive and prosperous a nation is. GDP, or Gross Domestic Product, measures the total value of goods and services produced within a country's borders in a year. It gives us a snapshot of the economy's size and output. Meanwhile, GDP per capita divides that total by the population, showing us the average income per person. It's a neat way to see how wealth is distributed among citizens. Gross National Product, or GNP, on the other hand, goes a step further by including income earned by a country's residents both domestically and abroad. GNP per capita, therefore, tells us not just how much a country produces, but also how its people are faring globally. But now, GDP numbers can sometimes be tricky. Take Luxembourg, for example. It's often tagged as a wealthy tax haven, and this is one of its secrets. Why? Well, its tax policies can attract lots of international business, making its GDP seem inflated with money passing through rather than being earned locally. The country offers some significant perks that make the process smooth and cost-effective. For starters, there's no withholding tax on interest payments. That means companies can issue bonds without having to hand over a chunk of their interest to the taxman. The interest payments to investors weren't subject to deduction at the source, making bonds issued in Luxembourg more appealing. On top of that, Luxembourg doesn't require a stamp duty, cutting down on the costs even further. Perhaps the icing on the cake is that bond issuers don't need to publish a prospectus, which simplifies the whole process and skips a lot of red tape. These advantages have made Luxembourg a magnet for companies needing to raise capital through debt. Despite Luxembourg's relatively small population of around 630,000 people, it manages to attract a staggering amount of FDI, which stands for Foreign Direct Investment, comparable to that of the United States. This translates to an impressive $4 trillion in FDI, averaging about $6.6 million per person. However, there's a catch to these figures. The International Monetary Fund has coined the term phantom investment to describe a significant portion of these inflows and outflows. What does that mean? Well, much of this money flows into what are essentially empty corporate shells. These shells exist primarily to help entities minimize their taxes by routing money through Luxembourg. In addition, a significant chunk of profits shifted from EU countries often finds its way into tax havens right within the EU itself. Places like Luxembourg, Ireland, and the Netherlands are prime examples. In 2015 alone, Luxembourg saw about $47 billion in profits being shifted, with Ireland and the Netherlands not far behind at $106 billion and $57 billion respectively. Now here's the thing, Luxembourg, despite having a seemingly standard corporate tax rate of 24.94%, has been at the center of controversy. The International Consortium of Investigative Journalists uncovered documents, dubbed the Luxembourg Leaks, that revealed some eye-opening practices. Take FedEx Corp, for instance. They set up shop in Luxembourg not just for its picturesque views, but for some serious tax advantages. They were able to route earnings from operations in places like Mexico, France, and Brazil through Luxembourg to their affiliates in Hong Kong. And get this, Luxembourg agreed to tax these earnings at a jaw-dropping rate of just 0.25%. Yep, you heard that right. That left a whopping 99.75% of the profits virtually tax-free. So Luxembourg, with its favorable tax structures and strategic allure, continues to be a hotspot for corporate finance. Luxembourg has another interesting secret. It heavily relies on foreign employees, which has a big impact on its GDP per capita. According to the IGSS, nearly 200,000 cross-border workers commute to Luxembourg from other countries, with 50% coming from France. This means that the Luxembourg labor market is heavily dependent on its foreign-born population, with only 27% of jobs occupied by native-born residents. These workers contribute to the country's wealth, but they aren't counted in the population when calculating GDP per person. Does this mean Luxembourg shouldn't be considered a rich country? Absolutely not. Its wealth goes beyond just GDP numbers. Many people attribute Luxembourg's status as the world's financial center to its high GDP indicators and its position as the richest country. Being a global financial hub has indeed been a major factor in Luxembourg's economic growth. But other relatively wealthy European countries like Malta and Cyprus also attract a lot of offshore banking and business registrations. However, their GDPs are significantly lower than Luxembourg's. So why is Luxembourg so much richer? Let's keep going. The average salary in Luxembourg is a whopping 6,000 euros, which is pretty impressive for Europe, but it hasn't always been this way. To really understand how Luxembourg transformed into one of the world's richest and most developed economies, we need to take a trip through history and look at the key events that made the biggest impact. Luxembourg is a parliamentary democracy with a rich history. It proclaimed its independence in 1815, but at that time it was not wealthy by any standards. The economy was struggling, primarily relying on agriculture and iron production. Many Luxembourgers actually left for wealthier countries, seeking better living standards. Meanwhile, in what is now Germany, various kingdoms and republics were coming together to form a confederation, creating free trade zones known as the German Customs Union or Zollverein. Luxembourg joined the Zollverein in 1842, allowing it to trade freely with several German states. This move into international trade was a game changer for Luxembourg. During the Industrial Revolution, the country discovered significant iron ore deposits in the mid-1800s. This find was a gold mine, well, an iron mine, really, and it transformed the economy, boosting the GDP several times over. By the 1900s, Luxembourg had become one of Europe's main steel producers and a major exporter, which helped develop its industrial sector. Today, Luxembourg's very own ArcelorMittal is the world's second largest steel producer. This rapid industrial development marked a significant turning point for Luxembourg, a country that had previously relied predominantly on agriculture. Back in 1929, Luxembourg made a game-changing move with the introduction of the law on holding companies. This law allowed companies to set up holding structures, where one entity could oversee multiple affiliated companies without getting deeply involved in day-to-day product or service operations. Instead, these holding companies focused on managing and controlling other businesses in which they held significant shares. The law defined a holding company as one that manages and acquires stakes in other corporations without diving into commercial or industrial activities. The main idea was to let big companies pool their capital in Luxembourg and give them a sweet tax deal. Imagine you're a multinational corporation with various subsidiaries around the world. This law allowed you to set up shop in Luxembourg, centralizing your operations and overseeing your global ventures from one spot. Think of famous names like Meta, Procter & Gamble, and Kering, all examples of powerful holding companies. Luxembourg sweetened the deal by offering substantial tax benefits. These holding firms could enjoy a minimal tax rate of just 1% or even pay zero taxes under certain conditions. This tax-friendly setup made Luxembourg incredibly appealing for multinational corporations, looking to streamline their finances and reduce their tax bills. Instead of being bogged down by high taxes, these companies could take advantage of Luxembourg's generous tax exemptions. At that time, Luxembourg wasn't exactly bustling with large, wealthy corporations like some of its European neighbors. However, the law on holding companies set itself up as a magnet for multinational corporations, looking to streamline their operations and benefit from favorable tax policies. This bold legislative move didn't just change Luxembourg's economic landscape, it transformed it. In the 1970s, Luxembourg found itself in the spotlight as large American holding conglomerates began eyeing European markets for expansion. These corporate giants needed a strategic place to set up their headquarters, and many of them zeroed in on Luxembourg. But it wasn't just the tax perks that drew them in. Luxembourg had more to offer. The country was teeming with big banks, top-tier law firms, and savvy accountants ready to help these conglomerates get established and thrive in Europe. This supportive network made it easier for companies to navigate the regulatory landscape and get a strong foothold in the market. Thanks to this influx of international businesses, Luxembourg's economy started to boom. The GDP surged, and the country began to transform into a buzzing hub of economic activity. In 1970, Luxembourg's GDP grew by 1.7% compared to the previous year. During 1970, Luxembourg's GDP reached $1,458 million, which positioned the country ninth among the 17 countries ranked by GDP. This marked an increase of $223 million compared to 1969, showcasing steady economic expansion. Luxembourg's GDP per capita in 1970 stood at $4,290, which was $642 higher than the $3,648 recorded in 1969. In recent years, Luxembourg has become a hotspot for big tech conglomerates eyeing expansion across Europe like Amazon, IBM, and Microsoft. They've chosen Luxembourg as their European headquarters for a couple of smart reasons: the sweet tax deals and the robust financial setup. These perks help them dodge hefty taxes on profits earned in places like the UK. But here's the clever part. These giants set up shop in Luxembourg and then lend massive amounts to their subsidiaries in high-tax countries. These loans come with sky-high interest rates. Now, those interest payments count as expenses, which can be deducted from taxable income. So when the UK subsidiaries rake in profits, they offset them by paying hefty interest back to their Luxembourg HQ. And Luxembourg gets to keep most of the profit untaxed. This strategy isn't just smart, it's made Luxembourg a powerhouse. In the 2000s alone, Luxembourg's economy nearly doubled in size in just 5 years. That's pretty mind-blowing growth, all thanks to these big players making moves into the country. Luxembourg isn't just about taxes, though. It's also a buzzing financial powerhouse, with big banks and investment firms driving a whopping 35% of the country's GDP. This financial muscle attracts global heavyweights looking for stability, friendly regulations, and top-notch financial expertise. Luxembourg has been quite the economic survivor, especially during the wild ride of the COVID-19 pandemic. While many countries were struggling with closures and remote work becoming the norm, Luxembourg managed to stay surprisingly strong. In 2018, Luxembourg's GDP hit $71 billion, marking an impressive 8.05% increase from the previous year. The following year, 2019, saw a slight dip with GDP at $69.83 billion, down by 1.65% from 2018. Then, in 2020, Luxembourg rebounded strongly, with GDP reaching $73.99 billion, a 5.97% increase from the previous year, despite the global pandemic. The real kicker came in 2021, when Luxembourg's GDP skyrocketed to $85.51 billion, marking an impressive 15.56% increase from 2020. What's impressive is how it's no longer just about steel. Luxembourg has transformed into a hub for global finance. Before we get into the last part of the video, make sure to check out the link in the description for my best recommendation when it comes to further expanding our knowledge on a more personal scale. Currently, Luxembourg is grappling with some economic challenges. The real GDP growth is forecasted to be modest, around 1.4%. The slower growth is primarily attributed to several factors: weaker net exports and reduced investment. External demand is sluggish, and there's a noticeable slowdown in residential investment. But the good news is experts predict a bounce back in growth over the year. On the inflation front, things are expected to ease up, though they'll likely hover a bit above what the European Central Bank ideally wants to see. Now, when it comes to fiscal policy, Luxembourg is taking a moderately expansionary stance to kickstart growth. It's a sensible move, but some argue that more targeted and short-term measures could have delivered a sharper economic boost. Nevertheless, Luxembourg's robust financial sector and strategic position in Europe should help navigate these challenges effectively. If you found this exploration of Luxembourg's economy and its secrets to wealth intriguing, don't forget to hit that like button and subscribe to our channel. We've got plenty more captivating economic stories from across the globe lined up just for you. And if you're hungry for more insights into the ever-evolving economic landscape worldwide, make sure to check out the video on your screen. Click away and let's dive deeper into the fascinating world of economics together.